What's interesting is you touch on obviously the capital and the different payouts and stuff. How did you guys, in terms of like risk, because a lot you've got the funding there, 7 figures as well. How are you managing the risk with those sort of size accounts?
I mean, for me, like I'm doing like 0.25% across pretty much the board, and I try and pyramid in. Like at times when it's like an A+ setup, I'll size up and do like 1%, as long as my initial balance is, I'm kind of close to my initial balance where I have a buffer. Okay. Like if I'm going in a drawdown, I kind of play it safe.
Of course.
I kind of size down. But I know you guys talked about it, like maybe it's best if you kind of split up all the capital, right, and trade them differently. Like I've thought about that too, right? But it is more management. Like it doesn't work. No, yeah. So it's all one pot that I'm looking at it as. Yeah.
How do you handle? Is there any challenges that come with that?
At times, right? Like because if I'm taking a loss on one, I'm taking a loss on all of them, right? But for me, it's a lot simpler because I'm just following one pair. If I'm in one trade, I don't have to follow one setup. If I talked with somebody about it over the weekend when I met in Miami, and he said, I kind of want to think about it as if I have all these funded accounts, maybe this week I'm just going to trade this account, and then the following week I'll trade this account, right? If I take a loss in one account, now I can use the other account the following week, even if I'm on a losing streak, I can still possibly, manage a payout from that one account while I kind of, crawl out of that drawdown period, which is interesting. I mean, there's a million ways that you can manage the capital, right? It's kind of how whatever makes you comfortable, really.
No, definitely. But it sounds really good. And, as you say, it's there is no right or wrong way. That's what makes sense to you. So it's interesting. Have you ever had any issues in terms of, having a copier on that many accounts? Any issues? No, good. Which copier do you use?
Social Trader tool.
Yeah, I've always used. Yeah, it's a good one.
I think at times though, I think the platform's gone down. Like,
oh really?
Yeah. Only for like a small period of time. Mm-hmm. Like all the accounts will disconnect. You're like, what's going on? What is stress? It's usually right around like the rollover period, like the end of day close. Like they may be updating their software or something.
Maintenance.
Yeah, you could always go on. Like I always didn't have any issues with logging into MT4.
They normally email you, don't you? Yeah. Mm-hmm. I remember using social trader tools, and you just get all these emails.
Oh yeah. I had
trade close.
I know, yeah. Especially if you're overtraded, man.
It's like 1,000 emails. Oh man, that's crazy. But yeah, it's really good to hear. Really good to hear. And how about you guys then?
Well, for me, I try doing it all at once, but the thing is, I like to get paid every month. So even though I can make more money combining it all together, psychologically, it just feels better to get paid every month, even if it's less. I don't want to go through a period where I'm down, and then I might rush myself to just get back to break even to make some profits for the month if I didn't even make any money. So with having different accounts, I'm able to place a trade here. Sometimes there's riskier trade setups, and if you haven't traded for a week, you might just feel inclined to take it. So then I'll just throw it on one of my side accounts. But I have a main account for A+ trade setups. I risk anywhere between 0.5% and then 1% once I have a 2% buffer. All my accounts are traded differently, but all I know in the end is I'm getting paid mostly every month, and that's all that matters.
That's good. No, it's a very similar approach to like his friend that where they kind of have an account every single week. Because for me, but not like I don't have it down to a complete science where it's like every single week. It really depends on how the account's going, like or the type of week that we're kind of going in. So if I know it's like a heavy news week, right, and I'm trading an account from the starting balance, right, I'm gonna take it a little bit easy. If the account goes into drawdown, it's no problem. But the following week, let's just say, okay, that account maybe is like down 1% or whatever, maybe down to 1.5%. I'll have the second account just so I can get a payout like the friend that was saying. So that way, because think about it like this, if you start it all at one, and I've done this before with my FTMO accounts because I had like two 100K accounts. I had a 200K account last year. And then when they were all in the copier, and it just added so much psychological stress if I was down 1%, because it's like, all right, my payout isn't in a week. You know what I mean? So it's like I kind of have to like trade out of drawdown, and it forced me a little bit to kind of like maybe overtrade if there was no setup there to try and meet that payout requirement, right? Because you have to obviously be in profit for that payout. So that's when I kind of like took a step back and just kind of trade a bunch of 100K accounts kind of separately. So if this account in 2 weeks is up 3,000, I can withdraw 2,400. If that 100K account is negative, it's fine. I'll just try and trade my way out of drawdown on that account down the line. If this 100 account has 2,000 profit, I can withdraw 1,800 on that bi-weekly. So, but I will say this, it is so much more in terms of like management, because you have to know, okay, this accounts for this accounts for that. This account, okay, is in drawdown. I gotta like slowly build it up.
Pros and cons, right?
Yeah, it's pros and cons with everything. So you just kind of have to, so you kind of exactly, and switching between like, the MT4 on your desktop or whatever. So again, it really is all dependent on what cons is like the least to you. So if like, because at the end of the day, it's like, you know, for Kyle, it's much easier to manage. Yeah, right.
We're giving away the trade secret, man. That's why.
But yeah, but like for Kyle, for him, it works best because it is so much simpler when you're trading one account. It really, really is.
Yeah, but like you said, like last year I was going through periods of drawdown. You know, I'm in a drawdown period for like a month and a half. I'm not making any money.
Yeah, see, and that's
Do you have any that are like 8% drawdown, then 10% drawdown?
Yeah, they're different, right? But like I'll usually never try and get below like 2.5%. Like if I'm
using
yeah, because like if you really think about the drawdown, like that's actually you're down 25%.
Exactly.
Because I think obviously, you know, in terms of if you have such a large capital pot like that, then obviously using the 0.25%, for example, is
It's actually high risk. It's actually high risk.
Because I was going to say, you could go 0.1, for example. Yeah. It's still a substantial amount of money and keeps you in that game.
Yeah.
But no, it makes complete sense. And as Omar said, in terms of...
yeah, I guess as far as like monetary risk, like it's almost the same. Like if you have, you know, a 600K account, you're taking 1%, that's like $6 grand. If I'm doing it on like $2 million, doing 0.25%, it's almost the same as a monetary risk.
100%.
So let me actually throw a question out there as well, because I actually wanted to pick a Kyle's brain and Paladin's brain as well, and even Riz, you can chime in as well. When it comes to the actual challenges, right? How do you guys approach them? Because I've talked to so many different traders, and I'll be honest, there's like one trader, I'm not gonna name who it is, but they're crushing it with like the payouts, passing challenges consistently, and they're doing like real good numbers. And I had a conversation with him, and he pretty much risks the full daily amount. So if there's a 5% drawdown, right, he'll risk like 4.5, obviously just to avoid slippage, and because you don't want to get like too close to 5,000.
What happens? What does he do if he takes the loss though, the initial loss?
Yeah, I mean he'll just kind of like do the other 5%, assuming there's the 10% drawdown, because I know some firms are 8%. He'll just do the next 5% the next day.
Oh man.
Yeah, so he's good.
Giving himself two times.
Yeah, but that's enough. I will say this. But I will say this, right? Because like I don't want like the audience to kind of like he's in a better financial situation, and he's had multiple 5-figure payouts, so he's able to do
that as a business expense, right?
Exactly.
Using
that's how he views
business
it.
expense, because you get funded faster, right?
Yeah, that's his goal.
There's no minimum days, or you get funded faster. But for me, you know, like typically on phase 1, I'm doing like 1 or 2%. If I go up, if I win my first trade, then you can do 2-3% and then pass it in 2 trades. And then phase 2, it's almost the same thing. I'm doing 1%. And then when I get funded, it's, you know, I try and deleverage. At times, like when I find an A+ setup, obviously I'm trying to hit a home run. But, you know, some of those home runs don't always pan out. Like the other day, I left 50K on the table just from closing it an hour too early. Like an hour too early, I was like, all right, I'm going to go get lunch. I came back, I was like, man, I probably shouldn't have done that.
Yeah.
But, yeah, like just doing, for me, 1% is fine. Because like 8R, you could, on a good week, like the market's really been choppy this year. So on a good week, you can do 8R. Like that's, you know, 2 or 3 trades in the bag. But I see like the stats, they don't lie. Like a lot of people are losing their account, right? In like 9-10 days or whatever it is. So a lot of people are probably not really giving themselves a chance to try and pass it. So I wouldn't recommend the 4.5%. Like obviously you do.
Yeah. By the way, I don't recommend.
Sounds fun.
Yeah. By the way, I do not recommend this. I'm just saying stuff that I heard.
I mean, if you have an edge, like you could definitely do it. You know, like if you're waiting for that. The thing was, I recommend this. Is a lot of people would just be better off if they waited for the perfect setup and then pay for the account. You know, instead of paying for the account and now forcing it, like, I got to start trading this right away. You don't have to do that. You know, like you could pay for the account and let it sit there for a little bit and then wait for the A+ setup. But if you don't have the experience, you don't know what an A+ setup looks like. So when somebody asked me the other day, what does an A+ setup look like? I can't really, it's hard for me to tell you what it looks like, right? Because it's like years of experience. It's me watching, back testing and trading the same setups over and over and over again. It's hard for me to convey like what that A+ setup is. Like you kind of have to do the work on your own and figure out what your A+ setup is.
Exactly, yeah.
What's actually funny is there was one time in New York session where the market conditions were so perfect. Everything was beautiful. And I'm like, okay, I'm about to get funded again. I bought a challenge at that instant with a prop firm that allows you to get funded in 1 day. And I just ended up risking 3-4% of that trade. I started scaling on it, which I don't usually do on my funded accounts. I went aggressive just because everything was clean. And I passed the challenge. Price retraced back into an area to buy again. I bought it again. I got funded within that day.
Yeah.
So if you see that the market conditions are really good, might as well just risk a little more. That's if you already have a safety net. That's if you have already a bunch of funded accounts, because losing that challenge is not that big of a deal once you do have a safety net. Because for me, a 400K challenge costs maybe like 0.5% risk for me.
Yeah.
So it all varies with everyone. But if you're starting off and you don't have a safety net, it's always best to go conservative and build that buffer first. Then you can proceed to risk higher.